Welcome back to Market on Close. I'm Marley Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We like to close out our show with some final thoughts on the session and stories that stood out to us. And Lithium Americas' massive move to the upside, closing up about 96%, really sticks out to me. Reports suggesting the Trump administration is eyeing an equity stake in the Canadian mining company. Now, this is the latest move by the White House to take direct ownership in the mineral supply chain, which is critical to U.S. interests. This, of course, following the Department of Defense taking a 15% stake in MP Materials in July. And today, cryptocurrencies were trying to recover some of the losses from earlier this week after a massive sell-off. Positions worth $1.5 billion were liquidated on Monday, causing the price of tokens like Bitcoin and Ethereum to tumble. It was the biggest liquidation wave the crypto market has seen since March, but Bitcoin prices did close up about 1.75% today. Ether also positive on the session. And Sam, what caught your eye during today's trading session?
Well, I suppose you could sort of view it as a US-China tech decoupling story. And what you were just talking about with the lithium is also a really big part of this as well. But you've seen big US names down in the session today, as we've mentioned. China, though, up after the Baba news. Nvidia, as I've been saying, did a sort of attempt at a comeback, but sort of flip-flopped and continued to stay under pressure today. You also saw names like Oracle and Micron struggling despite, so much optimism for them. We've just had those earnings and that beat out of Micron yesterday. So markets beginning to ponder perhaps just how much growth is already priced in here. At least those are the conversations that I've been hearing. Now, as I mentioned, those China stocks absolutely ripping after the Alibaba news, helping lift other names like Baidu, Pinduoduo, JD.com as well. And Tom Hayes was on the show this morning saying that Baba perhaps is the cheapest way to play AI right now, sort of referring to the fact that the valuation is inexpensive relative to its US peers. So that's an interesting take as well. But heading into tomorrow, what will you be looking out for, Marley?
Well, we have just a few earnings reports left, Sam, so watching those. We have CarMax and Costco both reporting tomorrow. CarMax is first. The largest retailer of used vehicles here in the U.S. will report before the open. Expectations calling for EPS of $1.03 on revenue of $7.07 billion. Shares of that company are underperforming the broader market, though, down about 30% this year. As for Costco, analysts looking for double-digit growth on both the top and the bottom lines for Costco. Estimates for Q4 revenue about $86.23 billion on earnings of $5.82 per share for them. And I'm a big Costco shopper, so I always like to listen into their call to see what sort of customer-centric approaches they're going to be rolling out and what sort of new items will be hitting the shelves. How about you, Sam?
Yeah, look, it's going to be really interesting to hear from that company, obviously, as a barometer of the consumer, particularly a very value-hungry one right now, Amali. But from the micro to the macro, it's going to be another important day on the economic calendar, and it's really all happening at 8:30 Eastern, just an hour before the bell. We'll be getting second quarter GDP numbers for an update on how growth is holding up, and given the resilience that we've seen, it's going to be very telling to see what that number says. But this will be key in light of some of the concerns around the labour market right now, and particularly amid the divided views on the path of rate cuts over at the Fed. Now, the OECD, just remembering, raised its growth forecast for the US economy this year given AI investments, but noted that tariffs and immigration may actually impact things next year. Now, we'll also get weekly jobless claims, as always, for an update on the labour market as well. Last week, remember, the number came in at 231,000, which was much better than the previous week, which was in the 260s. Remembering, any number over 250 is when the market starts to get a little bit nervous. So last week brought some relief, you could say, for the jobs market. So let's see if that trend continues, Marley, particularly because it's such a big focus on that side of the dual mandate right now, with the downside pressure to the jobs market, as many officials have been talking about.
Yes, we certainly got that commentary from Jerome Powell yesterday, and thank you, Sam, for that. That's going to do it for us on Market on Close. For Sam Vadas, I'm Marley Kayden.